everybody, I'm Lelemba Phiri. I'm super excited to be here with you today. I'm sorry I couldn't be there in person, but in the times that we find ourselves in, this virtual world has become our real world. So I want to thank AfricArena for inviting me to speak on something that is super important, particularly for Africa and Africa's social and economic recovery as we work our way through the pandemic. My name is Lelemba Phiri. I'm the founder and principal for Africa Trust Group. We are the fund managers for the 100 million Rand Enigma Ventures Fund that is focused on investing in African women entrepreneurs in the SADC region. And we're also the fund managers for the Shift Fund, which is a 20 million fund that is focused on innovative solutions that are looking to close inequality gaps post the pandemic across the continent. So the topic of my conversation today is gender lens investing and thinking about how we can move it from theory to practice. So I think for the most part, for most people, there's a huge misconception that gender lens investing is just a feminist fad, that they'll close their eyes and it's going to go away, and it's really just about women pushing for more investment into women, and that there isn't much of a business case. Well, I'll let you know that the business case has been proven over again, that investing in women entrepreneurs and investing in diverse teams really creates a higher return on investment. And so when it comes to gender lens investing, three things are super critical, particularly from an investor's perspective when you are looking at what companies or organizations to invest in, to examine it at three levels. And gender lens investing can be defined in many ways, but at a high level, we look at these three key areas. Number one is the ownership structure. How much of the business is actually owned by women? For the most part, you might find a diverse team, but you will find that the ownership structure has got such a minimal percentage allocated to women that they don't have much power in, pushing the strategy or implementing key decisions that matter in the organization. And so when you're looking at any business from a gender lens, you want to look at how the ownership structure has been divided and whether the team is actually diverse in terms of that ownership structure. Secondly, we tend to look at the leadership team. If you look through most organizations, you might have that the balance of genders is quite equal throughout the organization, but that at that leadership team where it really matters, where people are making the key important decisions for what to do in the business, how to navigate the business, that there are less women. You might find them in the lower ranks and not really at that senior leadership rank. And so a good gender lens investor wants to ensure that we have a diverse team at that leadership level that is building the strategy, that is creating the push and really leading the organization forward, that we have good diversity. And this matters both across gender and also across race. Third is whether a company's products or services are actually enabling women, and whether in the company's communication and in the way they make their products, in the way they market their products, they are deliberately positioning it to be welcoming to all genders. This is super important. And you might have some businesses that maybe might have a majority male shareholder, but whose products and services are enabling women in some way, maybe through their value chain, also through the services that they're providing, might be empowering women. That can typically be considered a gender lens investment as well. And so through these three key lenses, when you are looking at gender lens investing, it's really important to be watching for these metrics. What is the percentage of ownership? Is there a commitment from the owners to really get a lot more diversity into that ownership structure? Is there a commitment from the owners or the board to get leadership structures within the organization that are a lot more diverse? And is there a commitment to really ensure that the products and services that an organization is putting into the world really accommodating all genders? That's what we look at typically as gender lens investors. And so secondly, when it comes to the business case, I think the business case has been laid and put to rest repeatedly, that when you invest in more diverse team, number one, you get a higher return on investment, right? Secondly, it's been noted that when you invest in women entrepreneurs particularly, they have a higher commitment, willingness to reinvest back into their communities, up to 90% back, compared to 35% for their male counterparts. And this tends to create a lot better sustainable communities and sustainable economies. Third, it's been proven through research that particularly in times of crisis, women-owned and managed businesses and teams that have diverse leadership tend to perform better and are a lot more resilient, particularly through times of crisis. This has been attributed mostly to the fact that women have been found to be better at risk assimilation. And often this is mistaken for just risk aversion. I mean, I think for any business, a healthy dose of risk aversion is important. Otherwise, you run a very risky operation that really can't take in any shocks whatsoever. But businesses which have diverse teams and which have majority women leaders have been noted to be better at assimilating risk and therefore to perform better during times of crisis. Even now, during the COVID pandemic, there's report after report that is showing that there's better performance and better return on investment, better performance even at share price from the teams that have a lot more diversity in their leadership than the teams that do not. And for Africa particularly, this is super important because it's noted that Africa is losing, particularly sub-Saharan Africa, is losing up to $95 billion in annual productivity by not incorporating women and women entrepreneurs fully into their economies, by not providing them to access to finance, by the hostility that they're facing within the business environment, and by really not having them participate in the economy to their fullest potential. And so this matters, particularly for our continent, and particularly now when we're going through this recession that's been brought upon us by the pandemic, that we think a lot more deliberately about how do we recover. And this is not just the job of continental government or country governments or regional bodies to see how the continent recovers, but it's something that we should be thinking about even from the investor angle as to how do we deliberately invest in businesses that will help towards recovery. If there's anything that this pandemic has shown us is the high and stark inequality that exists in our countries between the haves and the have-nots, and to think a lot more deliberately when we're investing into models that might help to close this inequality gap, but also into more diverse teams that will increase the return on investment for ourselves, but also enable a more sustainable economy, more sustainable communities, and recovery, not just at the economic level, but social and environmentally as well. And so moving along from the theory of gender lens investing into the practical aspects about it, and some of the key lessons that we have learned with our Enigma Ventures Fund, where we have focused over the year in investing in women entrepreneurs, is that really there is no downside to investing in women entrepreneurs. There is no downside. What there has to be is a strong willingness from investors to really seek out these women-owned businesses. And I think in this particular day and age, there is no excuse for not being able to reach them, because almost everybody is going digital, and we really just have to put in that effort to find the businesses that are investable, that can turn the dial, not just for us as investors, but thinking about it at a wider socio-economic and environmental scale. And so 5 key lessons have come up for us in terms of how do you actually move this from theory to practice, and what are some of the things that you might need to do differently in order to successfully invest in women entrepreneurs. So number 1 is thinking about your pipeline and where you get your pipeline from. Typically, a lot of investments come through networks, but for most investors, their own teams lack diversity, and so which means that typically your network is also going to be maybe male or pale, you know. And so when you're thinking about where you're building your pipeline from, if you're committed to really investing in women entrepreneurs and to adopting a gender lens in the way that you invest. There needs to be a willingness to look wider and to open up your own networks. And so for us, this means thinking about it from our own fund team. Who is on the team? Where are their friends and family networks? Where are their business networks? And how do we cast that net a lot more wider? And so thinking about your fund's own leadership team and what it looks like, ensuring that it has diversity, will enable a more diverse pipeline. And also actively looking through women entrepreneur associations and women entrepreneur networks that are already convening a lot of women entrepreneurs could be beneficial for investors who are looking to invest more into women entrepreneurs or looking to connect into these networks. So number one is where you're getting your pipeline from. And this is really, really critical to look at both from your own team structure and your networks, but also where you're fishing from. I mean, the quality of your fish is dependent on the pond in which you're fishing. Number two is thinking a lot more deliberately about the industries where we are looking for our pipeline from. I think in the VC industry, particularly in more recent years, there's been a lot of excitement around technology and investing in businesses that are in the tech sector. But traditionally, the technology sector has been found to be a lot more masculine. And so in limiting your pool of investment to only a particular industry like technology, you are inadvertently closing the door on a lot of promising women businesses, because traditionally the tech industry has been masculine and has also been actually known to be quite hostile to women, not just here in Africa, but in Silicon Valley as well. And so thinking a lot more wider in terms of industries and where you're going to seek your investments. Because anyway, in this day and age, any industry can still use and apply a technology layer to really lever the business and to enable its growth. And so in being a lot more open to looking across industries and not just closing it off to technology becomes super important when you've got a commitment to investing in women entrepreneurs. We have found some really exciting businesses in food, in beauty and well-being, in industries such as education that are now applying a technology layer to really grow to that next level. And typically they wouldn't have been looked at as a tech business. But now with applying technology more as a lever, we are still able to take a traditional industry and create a lot more leverage by applying that technology layer. Number three is the need to really close the entrepreneur education gap between what entrepreneurs think that investors want and what investors actually want. For the most part, the VC industry in Africa is young overall, probably 10 years plus, just over a decade. And each region might have a particular ecosystem that is growing or is in early stages, and there might be very few use cases where entrepreneurs can look in their local communities to say this person actually got an investment, from a venture capitalist. And so there is a bit of an education gap that needs to be filled. And this is not exclusive to just women entrepreneurs. Even male entrepreneurs have a hard time really understanding what investors want. And so for most investors, there has been a lack of willingness to just take this journey, which requires some extra education into the entrepreneur ecosystem. But it is critical for building healthier pipeline. And it is something that investors have to be open to investing in, whether it is partnering with existing accelerators or networks that are actually doing it already, or coming up with your own, and thinking about this sense of collaboration across investors with other investors who might already be in that space, and seeing how we really can lever one another's strengths. But there is an education path that needs to be taken. This year, we launched our startup school, our African Startup School, which really looks at closing this gap and closing it quickly by, first of all, teaching the entrepreneurs what investors are looking for proactively by having entrepreneurs who've raised money on as facilitators, and also investors who are looking to actively invest as facilitators. We launched the school, it's called startupcircles.ai, in April, and already we've had more than 5,000 entrepreneurs enrolled into our programs and really showing keen promise. And already since April, we've invested in 4 of those businesses. And so having this willingness to take that journey of education with entrepreneurs is important, and is even more so important if you're looking at investing through a gender lens and getting a lot more businesses that have got majority women ownership. 4th is interrogating the vehicles that we're using when it comes to investing in women entrepreneurs. Particularly when it comes to debt funders and people who are in the debt game. It is known across the board and culturally that across this continent, women are unlikely to have collateral in their names or property in their names, because we are, a patriarchal society where men tend to be the ones who have the ownership of properties, even if it is a property that is in community. In a marriage, it's most likely that whenever a woman is committing any type of property into a loan, they're going to need her husband's approval and things like that. And so taking into cognition our culture becomes important. And so being innovative in our financing vehicles, knowing that what we've been doing for the last 50 years of financial services has not worked for women, becomes critical. We can't keep doing the same thing expecting a different outcome. And so how can we be a lot more innovative in our financing vehicles? And this year we've tried interesting models, quasi-equity vehicles, drawdown accounts in our investments, to see how we can start applying some of these vehicles to fast track the growth of women-owned businesses, and also get them to a place where now they might become ready for your more straightforward equity type investment. Number 5 is recognizing the importance of role modeling and really extensively profiling the women entrepreneurs or the women leaders that we're investing in. For most people, you can only become what you see. And if you're not seeing people who look like you in a particular space, most people have a hard time really imagining that it's possible for them. And so being a lot more deliberate about creating and showcasing role models from entrepreneurs who've gotten investment, getting them to pay it forward by getting involved maybe either on the educational side, educating other women entrepreneurs, getting them a lot more active in the ecosystem to show and that this is actually possible, and that people who look like me or people who come from where I come from are able to attract investment is very important. And this is something that can be led by investors, efforts that can be led by investors. Something that we've done in our team and in our investing is to bring on a super experienced CMO, the type of skill set that maybe a small entrepreneur would not be able to afford, to really help the businesses that we're investing in think bigger in terms of their own marketing efforts, but also give them access to networks and PR contacts that can showcase them into a wider network than they typically have on their own as women entrepreneurs. And so for us, it's been an exciting year. We're closing our first year having invested in 10 businesses. And so those are my 5 key takeaways for how really we can move gender lens investing from theory into practice. And again, it's looking at our own leadership structures, our networks, and therefore how do we become a lot more diverse so we can attract a lot more diverse entrepreneurs. It starts with the structures that we as investors have in our own organizations and the networks that we're tapping into. Number 2, it's thinking about the industries where we're fishing and how can we widen that net so that we're not excluding typically or traditionally feminine industries, noting that every industry now can lever technology in order to grow a business, and thinking about it a lot more deliberately, looking at traditional industries where women will typically are more likely to be found. Number 3 is really thinking about this journey, this education journey that is required, whether it's male investees or female investees. It's a journey that is required, and how do we deliberately invest in that education journey? Number 4 is thinking about the investment vehicles that we're using, thinking about how our culture plays a role in why a lot of them have not been working. And so being a lot more innovative in the financing vehicles that we implement, that we use to invest in women entrepreneurs, becomes super critical. And lastly, thinking about how we deliberately start to profile our entrepreneurs post-investment and enable them to start investing back into the ecosystem by being role models, by being themselves entrepreneur educators, so that we start to normalize women businesses, women-led organizations, and women leadership in general. You know, the more representative our leaders are, the better it is for the next generation to really tap into that and see that it's possible for them too. And so thank you so much for being here today, and thank you for your commitment to investing in Africa, and hope to see you soon.